I'm going to tell you a lie. That promise given to all of us. Your money is safe. How many times have you heard it? Leaving the bank, on the news, in politicians' sentences. Your money is safe. But have you ever asked this question? Is it safe, or is it simply inaccessible? Because that number in your bank account is not actually an asset. It's a promissory note. A digital promise the bank owes you. A debt confession hidden behind a contract written in fine print. And now ask the real question. What if the bank can't pay that debt? You woke up on an ordinary morning, making your coffee. But that midnight, one of the country's largest banks sent a quiet emergency notification to the central bank. Liquidity crisis. This means there isn't enough money in the vault. Central bank executives worked through the night. A government spokesperson appeared on screen with sleepy eyes and said those words. Everything is under control. But markets don't sleep. Stock exchanges had already turned red. Hours before opening, futures were falling sharply. And you? You're still making your coffee. This moment, that quiet morning when the news hasn't reached you yet, but everything has already changed, has played out the same way in every major crisis in history. In New York in 1929, in Buenos Aires in 2001, in Reykjavik in 2008, in Nicosia in 2012. Always the same scene, always the same words, always the same lie. Only the costumes changed. In the first 8 hours, a wave of awareness washes ashore. The first to learn are bankers, journalists, and people who open social media at 5 in the morning. The message spreads. Are the banks closing? Nobody can give definitive information, but everyone starts moving. Because what does the human brain do in the face of uncertainty? It assumes the worst. This is not a weakness, it is an evolutionary survival mechanism. Our ancestors, who exaggerated danger, survived. Those who underestimated it died in the cave. Your brain still runs on the same software. Something strange starts happening in markets. People shop from their instincts. Shelves empty within hours. Is this irrational? No. This is the visible output of a collective information processing system. When everyone senses something is going wrong, individual behaviors begin to synchronize. When everyone presses the same point on a balloon at the same time, the balloon bursts. In economics, this is called a bank run. But in reality, it is a collapse of trust. And credit card terminals? Working, for now. But interbank payment systems are starting to slow. Some shopkeepers are being cautious. Cash-only signs go up on windows. This looks like a small gesture, but it is a massive signal. The chain of trust has cracked. What is the economy at its core? A network where people who don't know each other exchange value by trusting each other. When that trust breaks, not money, but the system stops. Understanding this difference is the most important thing I will tell you today. The government made a new statement. A temporary liquidity period is being experienced. Your deposits are safe. But everyone who hears this sentence asks the same question. If they're truly safe, why did they feel the need to say so? This is not a paradox. It is a classic mistake of public management. Denial does not suppress panic. It confirms it. In the 1930s, President Hoover repeatedly said, "The fundamentals of the economy are sound." With every announcement, the stock market fell. Because trust is built not with words, but with actions. The public watches not what is said, but what is done. Social media is no longer an information channel. It's a fear amplifier. Posts beginning with, "I heard from a banker friend of mine that," spread like a virus. And the brain processes this information not through a critical filter, but through an emotional channel. The amygdala has taken over. The prefrontal cortex, the region that thinks rationally, has gone offline. The person is no longer an economic actor, but a mammal trying to survive. Did those who designed the system not know this? Of course they did. Behavioral economics is one of the central banking's fundamental tools. The system was built anticipating your emotional responses. Now the question is, will you respond in the same way? Let's do a thought experiment. Two neighbors. Both received the same news at the same time. One ran, panicked, tried to withdraw cash, got into a fight at the market. The other sat down, thought, reviewed their assets, and made a calm decision. Both experienced the same crisis, but one was swept along inside the crisis, the other observed it. What's the difference? Knowledge. Only knowledge. The central bank has acted. Capital controls are being implemented. Daily cash withdrawal limits, international transfer bans, account freezes. In technical terms, this means suspending the individual's financial freedom to protect the system. In 2012 in Cyprus, people woke up to find that 40% of the money in their accounts had been taken as a bailout contribution. Nobody asked them, nobody voted. The bank sacrificed the individual to save the system. And this was entirely legal. Because that authority was always there in the fine print of the deposit agreement, but you hadn't read it. Now the map becomes clear. In every major financial crisis, wealth doesn't disappear, it changes hands. After 1929, some investors built the greatest fortunes in history. In 2008, failing banks were bailed out, not the middle-class homeowner. This is not coincidence. It is system design. The financial system is not a democratic institution. It is a structure where power relations are encoded in mathematical language. And those who understand this structure navigate within it. Those who don't are carried by it. And digital assets? In every country where capital controls were applied, Argentina, Cyprus, Venezuela, China, Bitcoin transaction volumes suddenly surged. People were looking for ways to bypass the system. But beware, crypto is not a miraculous savior. With its own volatility, security risks, and regulatory uncertainties, it is an entirely different layer of complexity. What matters is this: knowing that an alternative exists is far more valuable than blindly following it. Why weren't you taught these things in school? Why doesn't the curriculum include budgeting, compound interest, the effect of inflation on purchasing power, asset diversification? The answer is uncomfortable, but simple. A financially literate population is a population less dependent on the system, and the sustainability of the system depends on a certain level of dependency. This is the system optimizing its own continuity. That's why financial literacy is not a privilege. It is a survival weapon. And this weapon has 4 bullets. First, understanding the difference between asset and liability. Things that generate money on your behalf are assets. Things that take money from you are liabilities. A car is a liability. A property generating rental income is an asset. Most people confuse this and go into debt for status. Second, understanding inflation. Money sitting idle in a bank loses purchasing power every year. Inflation is the quietest way governments erode their debts, and you are paying this tax without realizing it. Third, understanding diversification. Putting all your wealth in a single system, a single currency, a single basket means 0 options in a crisis. Fourth, and most importantly, questioning the narrative. When they say everything is under control, ask, whose control? When they say the economy is growing, ask, growing for whom? When they say trust the system, ask, for whom was the system designed? These questions don't make you paranoid, they make you awake. Because information asymmetry, some people knowing more than others, is the fundamental fuel of the financial system. When you learn to use that asymmetry in your favor rather than against you are no longer someone swept along inside the system, but someone who understands it and navigates through it. When the banks reopen, the scene will be the same, but the players will have changed. In times of crisis, wealth changes hands. What you know today largely determines which side of that transfer you will be on. History has shown you the rhyme. You've heard the melody. Now the question is, are you the songwriter or just the listener?